Hey everyone, I'm Anita Sharma. Welcome to Market Call on BNN Bloomberg. My special guest is Kim Bolton. He is the President, Portfolio Manager at Black Swan Dexteritas. He will take your calls, emails, and tweets on tech. Our number toll-free, 1-855-326-6266. Our email address, marketcall@bnnbloomberg.ca. Kim, what did you do to the markets today? Everything's flat. Nobody wants to be trading stocks today. They're thinking about their loved ones, their missed ones. What's going on? Happy Valentine's Day.
Yeah, happy Valentine's Day to you too, Anita.
Thank you.
Yeah.
How are you feeling about the market right now? It's been ripping, and then it takes a bit of a breath. We're heading into a long weekend. It looks like we're taking another bit of a pause here. But you're saying don't get too excited here. We could be on the precipice of another correction.
Well, who knows when the correction is going to come, but we do know it's going to come.
Yeah.
You look out over the last 11 years, you've had, 16 periods where you've had 15% plus gains. And out of those 16 times, 10 of them have been followed by corrections of around 10%. So it's coming. Who knows when, but you just got to be prepared for it.
All right, take a look at this 1 year. Broader market up 23%. Had a little bit of a hiccup due to coronavirus year to date, but how do you position yourself given the fact that we can't exactly time when it's coming? We've had situations with the bond market flashing signals yet again that yes, we could be entering into a rather precarious situation, but so far it seems all systems go.
Well, you still have to be invested.
Yeah.
So for us, we're 85% invested. We got 15% cash, which is quite a bit for us. But then we have a short equity indice derivatives overlay on top of that of about 70%. 70% sounds like a lot, but when you look at the beta of those technology stocks that we have, so if the market goes up 1%, we'll normally gain around 1/2%, so about half of the market. So we're still participating. However, if the market does retreat, that's when we start to make money.
Okay. How concerned are you about, what are you looking for, rather, from the U.S. Fed? We had Jay Powell in his testimonies this week essentially say that, yeah, we're keeping an eye on the coronavirus outbreak. We want to see what the impact is in China and the potential impact in the U.S. and globally. How worried are you about that situation? Could that be the straw? Could that be what it takes to undo what's been happening?
Well, certainly the virus didn't cause any massive retreat. And there's a lot of worries out there. There's economic growth worries, there's the virus worries. But to us, and what has really sort of prompted and been the catalyst for this market rally over the last four and a half months, has again been the liquidity injection from the Fed. From what Mr. Powell calls it the not QE, because it's really not QE apparently,
Right.
and then also the repo liquidity injection. So I think we're getting close to the end, and they've scaled back. You go back to the beginning of the year, they were doing about $60 billion in reverse repos. And now they've sort of scaled it back to sort of south of $15 billion. So I think that's going to be the first part where they're going to just sort of relieve and not do any more of those reverse repos. But then when you get that not QE up to sort of that $500 to $600 billion,
right,
that's when they're going to start to taper. And that's exactly what Jay Powell has said. He said, once we get up over $500 billion, then we'll start to taper. And he's sort of cited a few times as it being April.
Okay, Kim, thank you so much for that, sir. Let's take a break. We'll come back with Kim Bolton, President, Portfolio Manager at Black Swan Dexteritas. We're on tech stocks today. Give us a call toll-free, 1-855-326-6266. Welcome back to Market Call on BNN Bloomberg. We are with Kim Bolton. Kim, let's start with an email from Oz on Facebook. He would like to know, is it still a good time to hold this, or should he switch to another FANG stock?
Thanks for your call, Oz. yes, I would, if you have it, I would hold on to it. Would I add to it here? You know, we've got a price target of 248, and here it is sitting at 214. So you could even buy it here. You know, they reported on January 29th, and the concerns from a lot of investors and analysts was that their expense growth was growing faster than the revenue growth.
Right.
And so that's why you had that retreat of about 7 or 8%. Although now here we are going, but you know, Zuckerberg said all last year that it was going to be an expense year where they were going to spend a lot of money when it comes to privacy. And so he telegraphed all that going out. However, going into this year, now you got the election. And there's going to be a great deal of spend on the digital side of ads and so on. And then sort of the icing on the cake is that they announced that they were going to do another $10 billion of a buyback. So that brings it up to $24 billion. So there's a lot of tailwinds with you on this and not a heck of a lot of headwinds coming.
Okay. All right, Kim, thank you so much for that. Let's take our first call now on the program. Andre in Chilliwack, BC. Hi, Andre.
Where's Mr. Bell?
What's that?
Holidays? Anita?
Where's Mr. Who, sorry?
Mr. Bell.
Mr. Bell.
Oh, he
Andrew.
was just on the commodities program.
I see. Thank you for taking my call.
Yeah, you
Very
bet. You'll see him
important.
at 3 o'clock as well.
Okay, no problem. Very quickly, NVIDIA reported last night after the market up $22. Please, it's broken out. Is it a buy at this level? And what do you have as a target price? Have a great weekend. Bye.
Thanks, Andre. It's always nice to have Andrew Bell, but it's even better to have Anita Sharma.
No.
Yeah, they did extremely well last night on their earnings. Really, the highlights were they exceeded when it came to the data centers. They exceeded when it came to the gaming. We think it's getting a bit rich. You know, here we are, sort of 290. We have a price target in here of 315. So there's still a little bit of money left on the table, but it is getting a little expensive, and it is very, very much prone to what's going on to the rest of the market.
So if we see that bit of a dip, this would be one of the ones that would possibly get whacked. Is that what you're concerned about possibly?
Yeah, but I wouldn't sell it, and I'd look for places to buy it.
Okay. All right, Kim, thank you so much. Let's bring in Michael now from Vancouver. Hi, Michael.
Hello, Kim. Thank you so much for taking my call. Happy Valentine's Day to the two of you. Kim, my question is on Cisco Systems. It's basically you know, the stodgy old technology, but with some new technology coming in. And I just wondered what your thoughts of it. Kim, I also heard your earlier comments on a correction is coming. Kim, would it not make a little bit more sense for that correction to come post-election of this year? I'll hang up and list a response. Have yourselves a great weekend. Thank you.
Thanks,
Bye-bye.
Michael.
Thanks, Michael. So, Cisco market. Cisco, you know, we have about a 1.8% position in our portfolio in Cisco. It's more skewed to the 5G side. They're a big network supplier to the Nokias, to the Ericssons, even to the Huaweis. So our play with Cisco is more toward the 5G side.
Okay.
You know, they've tried to do what Microsoft did, and Nadella did over at Microsoft, of ramping up the software and also the cybersecurity side. But it just hasn't got enough legs under it. So we're holding on, a bit disappointing from the other day. On the market, Michael, you know, we're still fully invested, but we do have a hedge because we think that correction is, well, Mr. Powell has already said that they're getting close to the end of the reverse repos, and they're getting close to the end, and he's cited many times of sort of around April, where he's going to scale back on the not QE. If you look back, the last time that this was done was actually back in 2011. And the Fed started to taper in 2011, and they pretty well went over the summer. Back then, the summer of 2011, the market actually retreated 15%. So we don't think it's going to be that severe, but as soon as they start to close down the reverse repos and they start to lighten up and do the taper on the not QE, you're going to have a lot of the banks that are going to follow, because they have followed the lead of the Fed recently. So I think Mr. Trump would like to have it, later after the election. But I think the Fed is sort of telegraphing that it's going to be prior to that.
Okay, wait and see. In the meantime, let's not wait for Frank. He's on the line joining us from Toronto. Hi, Frank.
Good afternoon. I was wondering if I could have your opinion on Intel for the next couple of years. Thank you. I'll just hang up and listen.
Thank you.
Thanks, Frank. Frank, we don't own Intel. We do own a lot of their competition out there, particularly when it comes into the chip makers of AMD and into Xilinx and into Infineon. But we see that those guys have actually taken a bit of market share away from Intel. They've done pretty well of late, though. Here we are sitting up at 68. When you go through, and I think if you look at the majority of the analysts out there, I think the average is probably around 72, 73. So it's getting a little dear in price right now.
Okay. Thank you very much for that. One more call before we head to break. That would be Gary in Midland, Ontario. Hi, Gary.
Hi. Thanks for taking my call. I'm interested in the semiconductor area, but I can't seem to pick one stock, and I'm wondering if Kim is a good ETF in that area.
Okay, let's find out. Thanks, Gary.
Thanks, Gary, for the call. As I mentioned, on the single stocks in the semi space, we own the likes of Xilinx, of Infineon. We also have on the equipment side Applied Materials. We've been sort of in and out on both KLA and also on Lam Research, or on the equipment side. But it's a good question, because we have about 11% position in the semis. Half of it is into those single stocks of Xilinx and Infineon and AMAT. But we also, half of it is in the SOXX, and it gives us a lot of liquidity. We love the single stocks because that's the investment.
Right.
The SOX is an ETF. We use that as an investment, but more as a trading vehicle. It gives us a lot more flexibility. And you can chart it very nicely. So I would recommend the SOXX.
Okay, stocks. Let's take a break. Come back with Kim Bolton, President, Portfolio Manager at Black Swan Dexterostas, taking your questions on tech. 1-855-326-6266. Welcome back to Market Call. Let's get back to the phones. Let's bring in Albert from Ottawa, Ontario. Hey, Albert.
Yes. I'd like to have your opinion on Nokia, North American producer of 5G. Thank you very much.
Thank you.
Thanks, Albert. Well, the big guys in the 5G. You got Huawei, you got Nokia, and you got Ericsson. Albert, we've actually put our money on Ericsson. Only because, and they're both great companies, and they have tremendous footprint and market share. However, Nokia has just not, for us, been as predictable, as consistent when it comes to the earnings. And it probably has a lot to do with some of the baggage that they carry from past years. Both of them out of Scandinavia. Interesting that, what was it, Attorney General Barr mentioned the other day, and Trump got onto it, that really to get back at Huawei, that maybe U.S. government or your American companies should actually take an equity interest into either Nokia or Ericsson. It's a long-term investment, whether you go into Nokia or into Ericsson. You can see that in the price action because there's a tremendous amount of money that's going into it. I was reading the other day, in 2019, the 5G sort of ecosystem for the supplying of that spent about, I think it was around $7 billion. But you ramp it out into 2026, and you have to put in a couple of zeros beside that. So it's going to be huge, but in the meantime, I think it's a good time to get in. And we got in with Nokia up around 850, and then we scaled out of it just over 9, bought it back down in low 8. So it's something you can actually trade around too.
Okay, thank you, Kim. Back to the phones. Let's bring in Rick from Strathroy, Ontario. Hi, Rick. Rick, are you there? All right, we know Rick is on open text.
I wanted to take the call because we did own it and we sold it recently. What a fantastic Canadian company. And they are very much a leader when it comes to that sort of enterprise resource planning and processing side of it. But it finally reached our price target of $62, and here we are at 63. So we stick to our discipline, and we took the money off the table, and hopefully that you get a little bit of a correction because I love this company.
All right, let's see if you love this other company, which seems to be maybe getting a second wind. Frank in Edmonton, Alberta. Hi, Frank.
Oh, thank you. Thanks for taking my call.
Yeah, you bet.
Yeah, my question is on BlackBerry. Do you think BlackBerry will be great again, or it's just a dying company? Considering, if you look at the CEO, he's getting paid $150 million. Where do you see BlackBerry going? Thanks.
Thanks, Frank, for your call. Well, up front, we don't own BlackBerry.
Yeah.
We traded it. But I don't see it particularly as an investment. In the technology arena, there are so many fantastic companies that have very, very clear, concise runways that you can see. And it's difficult to see the runway going out into the future with BlackBerry. They've done a lot of great things. And I followed them for the better part all the way back to the Research in Motion days. But it's just not on our radar right now. There's just a lot of competition for investment in the technology arena beyond something like BlackBerry.
Okay, all right. Thank you very much for that, Kim. Back to the phones. Richard in Lethbridge, Alberta. Hey, Richard.
Thank you for taking my call.
You bet.
I'm interested in Roku. I'm not understanding these streaming wars. I wish I could get an explanation of that. The CEO of Roku was just on the other channel there, and he indicated that he actually helped Disney when they're doing what they're doing. And I don't understand how they work together and how you get Roku TV and all these kinds of things as a customer and as an investor. Thank you for taking my call.
Thank you, Richard.
Thanks, Richard. I don't have my research here. However, I know Roku extremely well. We don't own it because it's got a little bit dear in price. It's a $17 billion market cap company, and they make about $1 billion a year. And so at this price, it's just a little bit dear. But let me explain, Richard, a little bit about Roku. Roku is on the hardware side. So you buy the hardware, and then it facilitates the streaming side of it when it comes into the home. It's interesting. I didn't catch the CEO's interview over at CNBC, but I heard he was going to be on. He's a very, very modest man. But I would say that Disney helped Roku rather than Roku helped Disney, because with the whole streaming coming on and the content and the software and everything, and Roku has a leadership role on the hardware side of it, and a dominant leadership role on that side. So they really benefit from this very dramatic movement over into the streaming of content, and they're just in the right place at the right time.
Yeah, and you're in keeping with what the analysts are saying across the board. Richard, again, he probably already knows. They posted a beat today. We are seeing the stock move up about 55 cents U.S., but analysts on board are saying, look, this quarter is just representative of the strong momentum behind this company, which is seeing a boost from consumers cutting the cord on their traditional methods of watching TV and moving towards on-demand services like a Netflix, like a Disney. So it looks like it's still one to hold on to. And
you've got many, many more suppliers of content coming on board.
Absolutely.
Which is going to benefit to Roku. But you have to keep an eye on price.
Yeah, and another interesting side note to that is a lot of folks thought it would be an either-or situation. It would be a Netflix or a Disney or something else. But it turns out at the price points that they're coming out at, folks are taking on multiple services. So that's also got to be a bit of a tailwind for Roku, one would think.
And consumers want variety.
Yeah.
They demand variety and they demand quality. So there's lots of room for that for a lot of the suppliers.
If you can get that under your cord cutting, if you can get that for less than what you were paying for under traditional services, one would think you might be ahead, right?
Yeah.
All right, Kim, thank you so much for that. Everyone, thank you so much for your questions. Time to take a break, but we're coming back with Kim Bolton's past picks, and they look fantastic. So stay tuned for that. Back. We are with Kim Bolton. Time now for your past picks, sir, and very, very strong performance. You put your money on Microsoft. I know that you've owned this prior to January 22nd, 2019. Still had our viewer purchase this when you recommended it last year. They'd be up a sweet 77%.
It's the darling out there. And everyone's trying to find whether, who's going to be the next darling out of that. So, yes, we still own it. It's still in the top 5. But it's even as the results, the earnings come out and we get close to the price target, that's why we have the hedge. Because if we didn't have the hedge, we'd probably take profit on a Microsoft. Mm-hmm. So as I always say, the hedge actually gives us the courage to hang in there with these leaders like Microsoft.
Right.
And how can you not like it when you got, their cloud product of Azure had revenue growth last quarter of 62% year over year. And that is really their competitive edge when it comes to, they have leaderships in so many different places on the software side and also into the cloud computing. And then, their guidance, they're very predictable and consistent when they come to their earnings, but then their guidance is always a little bit conservative. So we just hang in there with it. It's trading right now, I think, about 182.
Yeah, 184.
Yeah, and our price target on here is 184.
Oh, there you go. Real quick, before we get to your other picks here, are you at all concerned about the fact that with Amazon, AWS seeking an injunction, getting it, there's a temporary hold on the Jedi contract that went to Microsoft in October, not to Amazon. Is there a potential they could lose this contract? And if they do, would you see a significant hit to their bottom line?
I don't think so. And it's going to, these things that go through the courts are going to drag out for a long, long time. They haven't booked the money, but I look at the runway when it comes to cloud computing out there. And if you listen to the likes of like Gartner or IDC out there, we're only about a third of the way through that runway of the migration from premise over into hybrid and also into the cloud.
All right, Kim, thank you. Let's get to your other past pick now, Xilinx. This one's relatively flat, up 2%.
Mm-hmm. We still own it. it's very volatile. They're a leader when it comes to that FPGA, the field programmable chips, which are basically chips that are delivered and then they can be programmed on top of it. And they have a leadership in that. But they're also into test and measurement with their chips. So it fits in very, very nicely with the autonomous driving, with the 5G, and also with the cloud computing. So that's one of our single stocks that we stick in there with it.
Yaskawa Electric,
Yep.
again, another top performer, up 36%. You still own this, right?
Yeah. Yaskawa Electric, there's really two out of Japan that are leaders. There's Yaskawa and also Fanuc, and we took Yaskawa. And they're both sort of going along the same style. You can see actually in the longer chart that there is some cyclicality to this whole sort of motor drive technologies and robotics. But we picked the leader. Not surprisingly, it comes out of Japan. And it's still cheap. It's still cheap even at this price because it's got a PEG ratio of 0.95.
Okay, well done, sir. Total
Thank you.
return average of 38%. Nothing wrong with that. Everything right about that. All right, let's come back with Kim Bolton, President, Portfolio Manager at Black Swan Dexteritas. We're on Tech Stocks today, 1-855-326-6266. Welcome back to Market Call on BNN Bloomberg. We are with Kim Bolton. Kim, let's get back to the phones. Let's bring in Paul from Prince George, BC. Hey, Paul.
Thanks for taking my call.
Of course.
Mr. Bolton, you are a wealth of information. I could listen to you all day long. I bought Constellation Software 8 years ago at $93,
Wow.
and the party just doesn't seem to want to stop. So I'm just like a few comments from you, please.
Well, congratulations, Paul. Great job. We don't own Constellation. We sold it about $120 ago. So I kicked myself for it. But, Constellation has their investment thesis or their business thesis is all about acquisitions. And when we saw that the acquisition pipeline had slowed a bit for them, and we were getting close to our price target, we actually took a bit of, we took the profit. So at this stage, you own it at 93. I don't know, Paul. If you're willing, I'd do some option activity around it. To actually, since you own it, you can do some cover calls. You can do a number of different option strategies since you own it. It's difficult, I know, to sell it because you got a heck of a lot of capital gains tucked away in this. But door number one, hold on to it. Door number two, do some option activity around your position and actually get some premium out of it.
Okay, Kim, thank you for your comments there. Let's bring in Catherine from Kelowna, BC. Hi, Catherine.
Hi, happy Valentine's to both of you.
Happy Valentine's Day.
Kim, could I get your thoughts going forward on AMD, Advanced Micro Devices?
Thanks, Catherine. We don't own it as a single stock. We actually we own it actually over in the in that SOXX, and it is a darling. It's taken a lot of, well, not a lot. It's taken market share from Intel, and they've really been very, very progressive when it comes to the scaling down on the nanometers and making those chips smaller and smaller and smaller, and supplying it over into the so right now they've got it down to five nanometers, and 5 nanometers are very much geared toward the autonomous driving, and actually over into the iPhones. And then those 5 nanometers are actually going to start rolling off in the second quarter of this year, coming out of TSMC, the Taiwan Semiconductor, and is going to AMD. So therefore, I think the runway is still fairly long for AMD, but they're getting a heck of a lot of competition. Catherine, one thing that I would maybe suggest is you can take a bit of profit, because I know it is pricey on the AMD, and actually put it over into something like Applied Materials, which is actually the equipment supplier for those for the chips that are actually going over into AMD.
So keeping it in the family, but just playing it from a different
part of the
angle.
ecosystem. So you can get the suppliers like TSMC, the chip people like an AMD, or you can get the equipment suppliers to TSMC. So it's a sort of a whole ecosystem, and I'd look at that whole semiconductor side that way, and that way you can actually take some profit and get in value in other parts of that ecosystem.
Okay, thank you, Kim. Let's get back to the phones. Bring in Dave from Toronto. Hey, Dave.
Hello?
Hey, Dave, you're on the line.
Kim, I wanted to ask about IBM versus Oracle. These are two stocks that, as a value dividend growth investor, I really like, because I can't subject myself to paying a high PE for some of these growth stocks in this cycle right now. So, like, as a long-term investor in my shoes, would you buy IBM or Oracle? I know you like Red Hat, and IBM bought it, and I like IBM's management, and they're gonna take more and more market share as the years and months come in. So, what do you think of these two names? Thank you.
Thanks, Dave. It's a really, really good question, because everyone is always looking for the next Microsoft. And is it going to come out of like an IBM or an Oracle? And, I would go more with the IBM side, and I'll tell you what. Ginny Rometty just stepped down.
Arvind Krishna's in.
Yeah. And Krishna's in, and then Whitehurst, who was the leader from Red Hat, has now come in as the president of IBM. So it's a great combination between Whitehurst and Krishna. Rometty was more like a Ballmer out there, and very robust and so on. But a lot of people are sort of thinking that, IBM, what is it going to be? Is it going to be the next Microsoft, or is it going to be the next General Electric? And so between IBM and Oracle, I would place the money on IBM.
IBM definitely bumping up last few days after the announcement that Arvind Krishna, who was really heading up their cloud computing from day one, is now promoted to that CEO position. So let's see how that goes. Let's get to a stock that, do you want to say something?
Yeah. The problem with the IBM is that I think it's right now in the high 150s. And a lot of the analysts have their price target out there in the low 160s. So I wouldn't go all in on IBM. I'd look at it and say, maybe we put a third down here and buy another third, and then buy another third a little bit lower, down around 140 or high 130s.
Okay. Let's squeeze in one more call. Let's bring in Peter from Vancouver. Hey, Peter.
Thank you for taking my call. Great show. Great and wonderful host, Anita.
Thank you, Peter.
And the great guest, Mr. Kim Bolton. Congratulations for your great return on your past picks. And I note that all your top picks on December the 6th were all up nicely. So today I'd like to ask you about Shop, which was your top pick. in October at
wow.
414. Now it's $700. You are so good, Mr. Kim Bolton. Thank you very much.
Thanks, Peter.
Thanks for your call, Peter.
You called shop too, huh?
Anita, I got to say on the side, I actually had a lovely, lovely dinner back on December the 19th with Peter. And
Yeah.
Peter took me out to his restaurant. So Peter, thank you so very, very much for your hospitality. Now, Shopify. We bought this down in that trough back in October around 310. And we sold it. So this is on the U.S. This is on the U.S. exchange. We just sold it the other day because it was up 19%.
Yeah, they're saying it's parabolic.
Yeah. And so we actually sold it. We sold it at 578.71. And
U.S.
U.S. And we're just watching it very, very closely to get back in. I think it's probably now down in the U.S. sort of trading around that sort of 530 level.
538.
Yeah.
Where would you want to get? Where does this have to go for you to get back into it on the U.S. side?
I'd get it right around that sort of 500 level.
Okay.
You know, if you can get a 400 handle on it, I think it'd be wonderful, but I think we'd probably get in a little bit before it. We'd want to build it back up to, we had it up to a 4% position, but there was a lot of profits in that too. So we'd like to get a 3% position. So again, a third, and buy a third just down in the low 500s and hope that it goes lower.
All right. Kim, thank you. Peter, great to hear from you as always. We'll come back with Kim Bolton and one more round of calls next on Market Call. Welcome back. We are with Kim Bolton. Kim, let's get back to the phones. Let's bring in Matt from Bolton, Ontario. Hey, Matt.
Hi, Anita. Hi, Kim.
Hey.
Kim, I'm wondering if I can have your opinion on NEO. I was looking at taking a position somewhere in the EV space, and I'd also like to look at something in the Chinese market on the rebound from Corona. And I'm wondering, is this a good option in your opinion? If so, would you get in now? If not, at what point? Thanks very much and have a good day.
Thanks, Matt. You too.
Thanks, Matt. Neil, we follow it very, very closely, but it's, this is the Tesla of China.
It didn't rip like Tesla last
No,
week, right? A lot of folks are waiting for that.
No. Well, there are a few headwinds over in China these days. So I wouldn't, we follow it because we're waiting for other sort of institutional players to get involved, because it becomes, NEO is much more of a trading stock rather than an investment stock. And so therefore you're going to get a lot of volatility in there. Mind you, look at Tesla too. But I'd even buy Tesla before I buy NEO.
Oh, wow.
Yeah. And look at the price action of Tesla today. Even though they're doing that offering, that common stock offering, it's still sitting above $800.
Yeah, unbelievable.
But Matt, I'd even look at, if you're interested in that EV space, I would look at sort of the whole ecosystem rather than just look at the OEMs, the equipment, the automobile makers. I'd actually dig down and, they do have, there's a lot of software players in there, there's a lot of equipment players in there, even like a Yasukawa is a big supplier over in there. So I'd look at the broader ecosystem of the electronic arts rather than buying the automobile companies.
Okay. Kim, let's try to squeeze in two more calls. Yep. We'll get to Carla in Edmonton. Hey, Carla.
I wanted to get your opinion on electronic arts. We have a position in this, and I'm just wondering if it's something you would continue to hold and where you see it going and where you see esports going. Thanks so much.
Thank you, Carla. We follow the sort of the whole gaming and the esports side a lot because we have some serial tech entrepreneurs that are very much involved in it. So they learn a lot from us on the public space. We learn a lot from them on the private space. So when it comes to the big players, Electronic Arts, Take-Two, and then what's the third one?
Activision Blizzard.
Activision Blizzard.
Yeah.
So, Carla, we own Take-Two, although it has gotten beat up a little bit lately. But that is our place that we like. We just like the original gaming. They have a much more longer runway when it comes to the publishing side. So that's why we like Take-Two over Activision and also Electronic Arts.
Okay, I'm not sure of our timing, but we'll squeeze in this one last call. Jessica in Quebec City. Hi, Jessica.
Oh, hi. Happy Valentine's Day. I'm making a big pink cake, so I'll be quick. Bolton Technologies. What do you think?
Thank you.
Thanks, Jessica. I often get this call, and that's why I follow it, but it's just too small. It's got a market cap of 120 million. So there, and it doesn't trade all that well, but it's an interesting play in the technology space because they're in the right space when it comes to the active radio frequencies and also the microwave products. But you can see it on the chart here that the price action isn't very promising. And so, but we do follow it because I know a lot of Canadians actually follow it too. Yeah.
I'm actually seeing the market cap at 72 million
Yeah.
now. Wow. All right, sir. Thank you, everyone. Thank you so much for your calls. Happy Valentine's Day to you as well. Getting all sorts of tweets and emails from our viewers. Amazing viewers, best on the planet. Top pick straight ahead. Welcome back. Top picks time with Kim Bolton. You nailed it with your past picks. Let's get some more picks from Mr. Bolton, Applied Materials.
So this is one of the equipment players in the semiconductor space. So you have Lam Research, you got KLA, and then you got Applied Materials. They just reported on Wednesday. There was a lot of concern because KLA reported earlier in the week, and the guidance wasn't as good. However, Applied Materials came in and they did a fantastic job. They guided 7% above expectations out there. So we believe that the price target here of $78 is very, very achievable.
Okay. Taiwan Semiconductor, TSM on NYSE.
Yeah. You know, we finally bought into this, and here it is, $58. You know, I said before that we actually took some of the money on that we've taken profit on and put it over into Taiwan Semiconductor Manufacturing Company. We have a price target on this of $79, so there's still a good long runway. Phenomenal company. They are the undisputed leader in semiconductor boundaries. They have a 50.5% market share out there. They've maintained that leadership because they just have advanced processing and they also have scalability. But the other thing that they don't do is that they never go out and design, manufacture products under their own name. And so they have the capacity and the scalability, and that's why the likes of Apple uses them. AMD uses them. And they have resources around the world, and it's just a phenomenal company. When we found that we're getting close to some price targets and something, this was a great place to put some money in.
Okay, and you're also finding value right now with Walt Disney.
Yeah, this again is a relatively new ad with some of the profits that we've taken on some of the others. Here it is, just shy of 140. We've got a 12-month price target of $160. So this one there's going to be some volatility in Disney coming up over the course of the year. So this is why I say do it in a third, a third, a third. A third now, buy another third down around 130, and if it goes down to 120, you can say thank you and buy it down there. It's an interesting company, and I always sort of compare it to an Amazon. You know, Amazon has AWS, which is such a cash cow. Disney has their parks and merchandise side, which accounts for about 60% of their revenue and their income. So they've used that, and then where their runway really runs out or goes out into the future is now into the streaming of the Disney Plus. However, there's going to be some volatility. That's why I say it a third, a third, a third, because they said the other day when they came out with their reports that they're going to be affected on the park side over in China because of the virus. It would be amazing if they could actually replicate their box office hits again, but that's going to be tough.
Okay.
And then there's a lot of competition in the streaming side.
All right, a lot of competition. Sir, you took it down to the wire. Fabulous information. Our viewers appreciate your insight. Kim, always great to see you.
Great to see you, Anita.
All right, thank you.
Happy Valentine's.
Happy Valentine's Day, sir, and happy Valentine's Day to you. I'll see you later on tonight. Market call tonight. Good luck on the markets.